All right, there we go. Should be live now. Everything looking good. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8:03 p.m. Eastern Standard Time on 11/16/2022. And as always, before we get started, please remember this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. What's going on, Angel? Good to see you. Let me know in the chat everything's coming through loud and clear. So let's go ahead and what's up, Lazy Boy? Good to see you as well. Good evening, my man. So let's go ahead and jump right in. So obviously FTX and the whole blow up, and we're just getting more information after that. Obviously, sounds like there was a little bit of Ponzi bubble, a little bit of fraud, a little bit of trading with customers' funds, a little bit of intermingling. But when it's all said and done, it's just part of the tightening, part of the money getting more expensive. And, that was today's thumbnail. Obviously, Jerome Powell assassinating Sam Bankman-Fried the same way that he has assassinated Cathie Wood and Michael Saylor and many, many others. And he's going to continue on his rampage of assassinations. He said over and over again he plans on keeping at it, so to speak. So let's go ahead and see how that's going to reflect on the markets more long term. Obviously, we saw a recent bounce, big weakness in the DXY and TNX. Currently, still, it's not done yet. And big strength, at least short term, in gold, risk on equities, pretty much anything but crypto. Unfortunately, crypto is the victim of a FUD feud once again. We're going to talk about Binance a little bit while we're streaming tonight. So let's go ahead and jump right in. We're going to take a look at something we haven't looked at in a little while that's very relevant. Matter of fact, let's go ahead and look at that first. We're going to jump over here to our Fed data, and we're going to look at the balance sheet of the Federal Reserve. All that stuff that they bought, that they keep talking about. People seem to forget that there's a whole second half of the tightening process, of quantitative tightening. Everybody's talking about rates. Everybody's talking about when the rates are going to peak and all this stuff. Nobody's talking about the balance sheet. The balance sheet that was over $9 trillion. And now when we look at it, here we have, I have it broken down into two separate charts. So first we're going to look at the asset securities held outright. This is the mortgage-backed securities. So mortgage-backed securities, here we can see on the lifetime chart, this thing went absolutely parabolic, reached up here almost $2.8 trillion. So let's go a little more local. So if we look at the 10-year, we see, basically, what are we looking for? We're looking for a trend. We're looking for what's going on, what's potentially going to happen, etc. So if we look back in the main, this was 2008. Obviously, we know what happened in 2008. Global financial crisis, massive bubble burst in the housing industry. And this is essentially what the Fed had to do to get us out of that bubble, to get us out of the recession, I should say. So this is 2009 in February. They start buying mortgage-backed securities and it goes up to 1.1 trillion. And they stop buying, or it peaks somewhere around July of 2010. So, they're doing this for a good year and they buy over $1 trillion in mortgage-backed securities. And then once it peaks, the drawdown goes back down to about 850 million. So, they sell off roughly, quarter of $1 billion. So when it's all said and done, we don't even come anywhere close to back to no mortgage-backed securities on the balance sheet. And then, of course, we have a run up again that, peaks out somewhere in 2015 to 2017. And then that leads into the Rona situation. And obviously, when we trough right there, we're at 1.37 trillion. And then when we peak here, we get to 2.7 trillion. So it doubles. It goes from 1.3 to 2.7. So they doubled how much they had to have on the balance sheet just to sustain, just to keep I mean, that's in a recession. So any further, it's getting just super painful, super bad. So if we zoom in a little more, we can go to the 5-year. Again, this is what we're talking about. Obviously, they just marched it up here, regular buys. And then we see they finally started to, decrease the balance sheet back here. So the maximum peak, the all-time high, the highest it ever got was $2.74 trillion. And now, obviously, they have raised rates also. We don't have a way to measure exactly what this does alone, because at the same time, they're raising rates. They're also running off treasuries. They're also running off mortgage-backed securities. So it's impossible for us to have some kind of control group so we could tell how much this is affecting it, how much other stuff's affecting it. But if we know they reached 2.7 trillion here, and obviously we see them buying and selling as they're essentially things are rolling off the books and they're replacing some things and et cetera, et cetera. But the fact of the matter is we did peak back here and we are slowly going lower. Now you could argue this is 2.74 trillion in April. And now this is accurate up to mid-November and we're at 2.67. So 2 million, no, these numbers, they don't even make sense anymore. So we have 2,678,524,000,000. At the peak, we have 2.74. So we really have only sold off, about 75 billion? I mean, that's not that much. That's not as much as the Fed has been talking about they were going to do or planning on doing. And meanwhile, and you're like, oh, big surprise, the Fed isn't doing what it said and it's not doing as much as it said. My point being, though, is that the housing market has, come to a halt, a screeching halt. Prices not even considered. Prices are coming back down a little bit. And yeah, sure, it went in a bubble, so it's going back. But I just mean like actual activity in the housing market is dead stopped. Again, because of rates and whatnot, et cetera. So it's not just one factor, but very interesting to pay attention to that. Now, if we look over, we're switching to the other chart now. And here we have our U.S. Treasuries. So the other half of, and when I say half, it's not by dollars, but just the other, half of the relevant part of the Fed's balance sheet. So again, 2008, we see we go into recession, and then we see the balance sheet just going basically parabolic from then. This is 476 back here. So that would have been 476 billion. And then here we peak out in, around 2016, somewhere in there at about 2.5 trillion. And then the trough here, again, we're looking at 2019, August, arguably it starts peaking up. So going into, and obviously people are like, oh, there's no way anyone could have known in advance the Black Swan event or anything like that. Well, if you were watching this, you might have thought, hey, there's something fucking going on here because, it's selling off, obviously coming down from 2018. We trough here in 2019 in like September. And then already at the end of 2019, before anyone's even heard of the Rona, the Fed is suddenly buying billions of dollars worth of treasuries suddenly. But I mean, obviously, if you were paying attention, that there was issues with repo and, you saw a lot of this coming because of it. So, but obviously at the time, people didn't know what the repo market was. People didn't know about the Fed balance sheet. When I say people, I mean broadly. Compared to now, there's been at least some form of awakening, I guess you would call it. But the fact of the matter is, they were already buying a shitload of treasuries. I mean, it's not, in relative, it's not a shitload, but relative to like actual real money, it's a shitload. 2.1 trillion. And then, this is basically March when everything's going down. They had already bought $400 billion, $400 billion in treasuries. And then obviously we see their program kicks in, and that's basically just an instant, move up from 2.5 to, essentially 4.5. It's just an instant $2 trillion injected in a matter of months. So regardless of all that, regardless how you feel about it, all that, now we have essentially the playbook and what's taking place. So obviously there's already issues. The Fed is already buying a ton of treasuries. We, then all of a sudden it hits and it's like, oh no, it's the Rona. Oh yeah, that's it. That's why we're going to send out all this stimulus. Definitely because of that, because of Black Swan, not because of anything that was giving us clues far in advance to what was about to happen in the economy. So now maybe it'll give us a clue far in advance to what's about to happen in the economy. Because here, again, we topped out right here in June 8th, 2022 at 5.771 trillion. 5.77 trillion. So we'll call it 5.8. We'll round it off. Since then, obviously, we see a lot more action in here. But when it's all said and done, 5.771, and we went down to 5.575. And when I say 771, 575, so about 200 billion. I mean, so if we look at the amount that we have sold off and the amount that the markets have reflected it. Now, if you look at the Dow, you're like, oh yeah, okay, it's down like 10%. It's not a big deal, right? But I mean, like, there's a lot of stuff, a lot of big names, big money that are down 50%. There's a lot of like tech names or profitless companies or cryptos or whatever that are down 90%. So if this is all we've given back so far, and we know, when this is coming down, things aren't exactly rosy, in the economy, in the world, etc., especially as it's accelerating down, that's when the big recessions are either in the process or coming. So you could argue, yeah, technically we're in recession and you're a recession denier. You could argue, well, technically we didn't go into recession because it was a weird situation where there was no weakness in the jobs market. Both of those are valid arguments, and who really cares? I mean, because it doesn't matter. It doesn't matter if technically you can put a stamp and say recession officially or not. Who gives a shit? The point is what does a recession mean? What does it reflect? And how do we reflect that in our portfolios? And we know if this thing is peaking out right now, we're just now starting to come down from this level. And the Fed keeps saying over and over again at the Fed meetings, aggressively reducing the size of our balance sheet, aggressively reducing the size. So I don't know if they're just getting ready to actually ramp up and start aggressively reducing the size of their balance sheet. I don't know if they're already sensing weakness, so they're not ramping up all the way. Or I don't know, if they even mean it and they're just talking shit. But it's worth paying attention to. It's worth seeing what's on here. Because if the Fed is telling the truth, let's just say the Fed is telling the truth. If they are, and they suddenly do, we do see them reach, what would amount to terminal velocity. And then we just see a steady downdraft, a steady, just a straight line like this, diagonal line that just goes down. And that's okay. That's fine. We got one on the way up, so we get one on the way down. If we start to see that happening, that's going to reflect a certain way on markets, on the economy, etc. It's worth paying attention to, because I think people have forgotten that there's a whole another side to the equation. Because even if we literally just keep rates where they're at and the Fed continues the pressure into, the treasury market and into mortgage-backed securities, that's going to be a big deal. That's going to be a big deal. So moving on here, just figured we would talk about that. We have not discussed the Fed's balance sheet in a while, and you know how things go. Something comes up and people start paying attention to it, and then all of a sudden everybody's talking about it, and it's the next big thing, and it's news, and it's breaking or whatever. And then, once its little cycle is over, it's gone, it's forgotten, nobody pays attention to it. Well, just know that your boy is always fucking watching. JP, I got my eyes on you. I see what you're doing. I'm always watching, okay? Crypto Trend Shark is waiting in the dark. So you guys know what it is. It was worth talking about it, worth mentioning it, worth paying attention, because the truth is we talk about the same things on a regular basis, and it can become redundant looking at TNX, looking at DXY, but they're just the entry level, the basic surface of what we're looking at. And then once we start to see some signs from then, we can really look for confluence in other areas of the markets, other metrics, other data, and then we can do some technical analysis and say, okay, is this like a high probability? Actually, the bottom is in and the Dow Jones is right, and we're going to go up from here and yields are topping. And sure, we may reach 5% Fed funds rate next year, but that's it. And then immediately the Fed's going to be cutting because the economy is going to be broken. And this is, it sounds crazy when I say it like that, but that's what the market is betting on currently. The bond market, the stock market, everything. The market is betting that around like March next year, we're going to top out about 5% Fed funds rate. Inflation's going to be coming down. It'll be roughly 3% by the end of next year. And then, we'll be cutting rates by the middle of the year, if not end of the year at the absolute worst, on our way back to zero, back to free money, new all-time highs, everything's rosy. And if you believe that and you're betting on that and you agree with the market, that's completely fine. I don't believe that. I'm not betting on that, and I do not agree with the market. But again, that's just my opinion based on actual data. So moving on, TNX, obviously we know the key area we're looking for. We see some more weakness from support here. We're looking for the touchdown here to about 357. And then we're looking to see, does it hold up or not? Because if it does not hold up, you know, we have a high, we have a low, we have a lower high, we have a lower low. At some point in time, we're going to get a bounce, probably right around that level. And we're likely going to backtest like 3.85. And we'll see what happens. It's not likely that this is going to go down super, you know, heavy and have some deep retracement, knowing that, you know, very, very soon, the Fed's going to hike rates again. So, you know, this got up to like 4.3 right here. We have, the market is pricing in a 50 basis point hike in December. So if we get another 50 basis points and we've already pulled back like 75 basis points, I mean, we know this thing's going to move big back to the upside. It's just a matter of when. Seems likely it comes back down to like 3.57. Then we get that big 5-point bounce back up here, retest support. And then we can kind of see what happens from there. I don't think this is going to have a super deep retracement while the Fed is still hiking rates. But if they do come off the gas a little bit, or arguably come off the brake a little bit, I guess. If they let up on the brake a little bit, they're still hitting the brakes, but not as hard. They're going from 75 down to 50. You know, that is a sign for the market, and the market is forward thinking. So we just have to, you know, again, you're betting on a scenario where the Fed nails it. Everything's right. We're all good. We're back at new highs. All the stuff we just talked about is correct. And then on top of that, on top of all that, all the stuff I said I'm already not betting on and I don't agree with and is not likely to happen, on top of all of that, which seems very, very unlikely to play out perfectly. But on top of all that, you also have to be betting on, you know, stability based on, you know, the war going on and geopolitics and supply chains and deglobalization or de-dollarization or, you know, all that stuff is just playing out perfectly and there's no issues with any of that, no further tensions, none of that stuff. And again, that just doesn't seem that likely to me. But it's possible. We'll see. We'll see. So US oil is next. Oh, I'm sorry. And on top of all of that, as if that wasn't enough, I lost my train of thought there for a second. You probably noticed. On top of all of that stuff that we just talked about, the geopolitics and, you know, everything we just laid out and that perfect, you know, that is, honestly, that is exactly what the soft landing looks like. But on top of all that, there also has to be no inflation. It has to be coming down to like at least 3% or something like that, you know, on average by the end of the year. I don't think it's going to come down from 6 to 3 within a year. But I mean, we'll see. We will see. But that's what you're betting on if you're betting markets go higher. So US oil still here, exactly playing out between our 2 points. So we basically have the double top resistance right here in line with the moving averages. We have the potential double bottom support right here. So essentially what's going to happen? Well, we either find support and test back up to the top of the range and potentially hit our $100 target, or we lose support. And if we lose support from right here, I mean, we're testing the bottom of the range again. We're talking about $76 oil. So oil basically at do or die. Again, you guys know how I feel. When we're in a range like this, my bias is that we just keep bouncing around in the range. So I think we're about to find support right here. Maybe we even wick down lower. And then I think we retest 93. Again, just chop around sideways forever. We could chop around forever. Oil companies are doing fine. They're making money. These prices are great. And eventually you would think the USA is going to, you know, fill back up the SPR. But maybe we go into recession, oil prices drop, and then we can, you know, get that oil cheap. So VIX is next. We've talked quite a bit about the VIX and what's going on here and why it's been a little less reliable lately. It does still look like it's bottoming. The key thing we're looking for is just a higher low. So far we have it. There is clear resistance above our heads. We have the 200 exponentials, the 200 simple. We have the ascending triangle support, all that. But none of that matters. The only thing that matters is a higher low right here. If we do continue to the upside, if this is bottoming, at least on shorter time frames, you know, once we get through basically 2650, I would expect a very, very quick move on the VIX up to about 30, you know, possibly to retest the top of the range up here at like 33 or so. So, we're potentially looking at an explosive scenario, 26% to 39%. The real question is, from here, we're talking about 18% downside. So there's not really a trade setup. We're too close to the center of the range right now based off of the swing low and the potential upside target. Now, obviously, if you have a tighter stop loss, sure, maybe you could run your stop off of this recent swing low right here. And if we take that out, we're likely going here, so you don't want to be in the trade. Could that look a little bit more favorable? Yeah, I think so. And obviously the ideal point is down here to be just sure, as sure as you could get anyway. But obviously this was a recent swing, a few days since we touched it. If we took that out, that's definitely an important thing. Just to test the top of the range to do the equivalent, it would be 10% versus 7%, but that's not what we're looking for. We're looking for the top of the range up here, 26% to like 40%. So sure, you could run like 8% stop loss with 26% upside or 40% upside. That's realistic. That seems likely. And if we take out the low right here, based on a candle close, we're likely coming down here so we can reevaluate back at those levels. Which the way the VIX has been acting lately, and, talking about the duration as we have been many, many times, definitely seems possible. I mean, the markets are being driven by options. The options being purchased are short duration. So it makes perfect sense that we wouldn't see true volatility reflected in the VIX as we have historically. But we also haven't historically had this many or even like short dated options like activity, volume. I mean, it's ridiculous right now. It's crazy. And, that's just the difference between investing and, leveraged bets. So Dow Jones on the daily, we obviously have reclaimed the 200 exponential and simple. We spent a few days up here at the highs. We're hanging out for now. The question is, are we going to get the V top? Are we going to get the blow off top, come back down here, retest the 200s, possibly go higher, possibly go lower? Are we going to just continue from here? Who knows? This is the key area to watch. Obviously, that is our key resistance. That's what we're paying attention to. If we take that out, we're probably going to new all-time highs. I mean, there's another step along the way at like 35K, but I mean, we're literally a couple % off the highs. I do not think that's going to happen, but I would not rule it out. Under any circumstance would I rule that out. Most likely what happens is we just continue lower highs and lower lows. If we take this out, though, we got to pay attention. If we flip the 200 exponential is already blue. If we flip the 200 simple blue, we got to pay attention. We have to respect what's taking place right now. Whether or not we agree that it's going to last, whether or not we agree what's going to happen, we have to respect the fact that this rally could legitimately have legs on it. There's an argument to be made. There is. Got to get pretty creative, but there is an argument to be made. SPY, I mean, the easy one is like, oh, it's just a short squeeze and people FOMO in. That's the easy one. And you know how I do it. Base case is always just the simplest. Keep it simple. It doesn't have to get all fancy and all that shit. No, thank you. Whatever just makes the most sense. Straight line from A to B. So SPY looks a little more realistic of what's actually happening here. We had a low. We retested the 200s, got rejected. New low. Back up here. Seems like the market's about ready to roll over. It really does. And if we see, obviously, DXY at support, TNX still falling, but it was lagging behind a little bit. That could have something to do with, the Qs, the Russell, the S&P, the Dow, gold, all being at key resistance currently. I say that, but the Qs actually, they look like trash. I mean, they're retesting the lows right here, but still ways off of the 200s. So there is still an argument that even without violating any key levels, without even getting any more bullish, that the Qs could jump up here to like 307. And all that would do is just put them in line with everything else. But it's going to be difficult because obviously tech is pretty wrecked individually. IWM, the Russell, again, retesting the 200s, looks okay. In between some key support, kind of hanging out here, trying to, find a bottom, trying to reclaim the 200s. If it does, if it maintains, we start laddering back into trades, buying support on the way down if key levels hold. But we know what has to happen. We have to flip them blue. We have to get on top. We have to, start to actually have real technicals. And we know that's not likely to happen because of the whole thing we talked about at the beginning of the stream. So XLE is next. Energy has taken out the high, been hanging out here at the top. You guys know my base case on this. I've said it a million times. I think this is Wyckoff distribution taking place right now. There is definitely a possibility we go higher from here. But, we had laid out a case where we come down lower. We have laid out a case where we go higher. I'm not sure exactly what's going to happen right now, but we put in a high. We came down here and basically put in a floor. And then we came back up after putting in a lower high and took out the lower high and the previous high. So now if we break down from here back inside the range, there's a very high likelihood. Obviously, we're going to retest the previous high down here at 83. We have the 200s, obviously. But then what typically happens is we come all the way back down to the bottom of the range and we'll retest like 67. So the same way everybody piled in at the beginning of the year to energy, and we saw like that big move, and then we saw the retracement and kind of go sideways. Again, everybody's just on the same side of the trade on this one. And I think that's what's likely to push energy back down all the way to like 67. I know it's a bold call, but I'd be real careful we don't get some distribution action right now. Now, if we consolidate up there and start ripping, by all means, I'm buying into momentum, or rebuying into momentum, I should say. XTN transportation, so came up to resistance, had a pretty aggressive sell right here, closed the gap. Let's see what happens though. If this keeps coming down, one or two more candles like this, and it's going to look pretty clear we're coming down to the lows on transportation. Semiconductors, same exact thing. Buffett comes out, says he's buying, or he bought a huge stake in Taiwan Semi, which actually is, in my opinion, a great idea. It's been completely underperforming lately. There's some definite head risk that, Taiwan just might not exist anymore, or might not be able to make semiconductors, or you might not be able to invest in it because it belongs to somebody else suddenly. But as long as none of that happens, I think it's okay. Me personally, though, I don't think this is a Buffett move because my man Buffett buys when there's blood in the streets. It's more like just been like complacent, just kind of sideways, slow kind of decline for Taiwan Semi. It's not really like blood in the streets, in my opinion. Blood in the streets or buying fear would be like there's like an actual event, like a geopolitical event, with like fire and brimstone type situation. So I feel like this isn't Buffett, or if it is, he's losing an edge. Just might be a little too soon on this one. I do think Taiwan Semi is going to new lows. I think the whole semiconductor space is going down here, back down to the lows. We will see though, very extended. We see some clear bearish divergence on the space right now. Does it have to be bearish divergence? No, but the histogram's already higher than the previous peak. And that previous peak was a double top from 245. So this histogram can go to the moon for all we care. But when it tops out, it needs to top out price action higher than 245 to not print bearish divergence. So, is it possible? Sure, it's definitely possible. And if you're betting on that, that's a nice bet right there. That's a nice little pop. All we need is another 14% upside, and it invalidates the bearish divergence. I'm not betting on it though. It's had a pretty tough time trying to get above these 200s as of late and has been unable to. Also, XLU, utilities, again, we reclaimed support and we're just kind of hanging out here, kind of chewing through some of the resistance. Nothing really changing here. The second that we see, if I'm correct, and we see this risk off environment flip back, or risk on flip back into risk off, I would expect this to surge. And I do think XLU is going to new highs. XLP at resistance at the descending channel at the 200s. We'll see. Consumer staples, obviously the place to be. We see the difference between Walmart and Target, right now as kind of like comparables between like, a staple and a little more like discretionary. But still both obviously in like the retail space and everything. We saw from Walmart, obviously, that a lot more of the spending was in food. They said a lot more of the spending is coming from people making over $100,000 per year, which means that people, affluent people that were typically shopping at nicer places are now downgrading to Walmart and the dollar store, and, typical behavior we would see going into a recession. We're not quite in depression levels. I know everybody wants to get all like scary and act like it's the end of the world or whatever, but, talk to me when you're eating cat food and then maybe I'll believe there's some horrible depression or whatever. I'm like, it's crazy when people talk about starving. You can literally buy a gigantic bag of rice and like some beans or frozen corn or something. Like you could stay alive for a couple pennies. So I find it hard to believe anyone's starving to death. at least in the United States. Now, third world countries, sure, but the West, come on, we're exaggerating a little bit about people being hungry and skipping meals. Like, there's a difference between not being able to afford to feed yourself or your family and like, oh, we skipped a meal. We didn't get McDonald's after school. You're like, did you eat later? Well, yeah, we still had dinner. Oh, okay. So you skipped your second lunch at McDonald's? All right. So we'll see what happens. Everything at resistance, everything very, very close to key breaks of support or key breaks of resistance. And we know what that means. It's a pivot in the market. The pivot does not have to be a reversal, but regardless, it's a key area. And the best part about pivots is when we enter trades off of pivots, whether we're right or wrong, we get to find out almost immediately. We get to find out almost immediately if we're right or wrong. So if we are right, we can move our stop loss up shortly afterwards and we have a perfect entry. If we're wrong, we get stopped out or close our trade quickly and we can either flip to the other side or just sit this one out, etc. So DXY at key support, this is the level we've been looking for. I mean, that's what the green box means, right? Did the gremlins put those there? Nope, it was us. We put it there. That was a target when we were way up here and everybody said we're going to the moon. It was not crazy to think, when we're talking about targets to the downside, a reset, everything being at support again. And I'm not going to lie, I did not expect the Dow Jones to rally 20%. But we don't know how much a certain asset's going to rally. We just know when everything's at support or everything's at resistance that there's a very high likelihood we're going to see that. So here we are back at support now on the DXY. The DXY has enabled this massive rally we've seen in equities, that and the meltdown of crypto. I think a lot of people took money out of crypto and probably put it in the stock market or something else. So, but that being said, at support, I'm not saying the dollar's going higher anytime soon. We could easily go sideways to down for months or even years. But I do think we're going to get a reflex rally back up here, a move back up to put in a lower high, if that's what we're going to do. We're going to at least test it. So Tesla, again, still just kind of hanging out here at the blue 236. So we knew, obviously, once we lost the green 236, the target was the blue 236. We did talk about a potential trade back to the upside, but there's just a little too much going on. We were talking about TNA the other day. I mean, I talk about it almost every day, even when I'm not streaming. TNA, obviously, one of the most exciting things in probably anyone's life. Lots of action in Tesla as well as Amazon. Did not take the move this time. Did not take it. But we'll see what happens. Obviously, there's a lot going on with Tesla right now. And I mean, I don't know. Is Twitter just going to be like Elon's like new incinerator for like money? Is he just going to continually be selling Tesla stock and, funding Twitter? Very, very volatile situation right now. And the way this thing is held up, I mean, and you're like, well, it hasn't held up that good. It's down over 50%. Yeah, it is. It is. But when we look at this chart right here and we say, oh, okay, this was June of 2019 and this is now, I mean, I would say it's held up pretty good. And we do just have a high, a low, a lower high, a lower low, a lower high, and then another lower low. And everything else bounced up here massively to back test the 200s, but Tesla didn't. So Tesla was strong for a long time. It's holding key support. And very, very soon, it's not going to be strong anymore. It's not going to hold key support. And it's going to be at $137. So when Tesla gets down to $137, I think I'll start looking at it again for a potential scalp somewhere around that level. Maybe I will front run it a little bit and I'll buy it at like $143. We'll have to wait and see, but yep. And we'll see what happens. And because the market is our little bitch, there's very high likelihood we will, in fact, see Tesla down here in the very near future. And let's look how the rest of Magma is holding up here. So we saw a nice bounce off Microsoft. Obviously, back to the 382, back to resistance, hanging out there for now. Still looks like this could have legs. So we had some clear bullish divergence, clear bullish divergence, clear bullish divergence, explosion to the upside, back to resistance, hanging out at this level. If we can get a little more of a move up here, 266 still seems likely for that 23% trade in Microsoft. Next, we have Apple. Another we came all the way back down to the lows. Then we came up and put in a slightly lower high for now. I told you guys I'm exiting the remainder of the position if we do start closing back above the 200s. And I will, graciously bow out. I will enjoy our, quick little 17% here. but not going to just like ride this all the way back up and turn a winner into a loser. But as long as we're below the 200s, I think it's just a matter of time. Google is next on the daily. So again, we see a very clear bounce off our Fibonacci, a back test of the previous Fibonacci level. If it's got legs on it, could easily put us back up above like 115, 114, something like that. Doesn't seem likely to me, but we did cross the 821 bullish. Bunch of green histograms, blue slope line, hard buy signal coming out of the bearish control zone. I mean, it's saying, hey, look, if we can close above the 382, we're going back up here. So, you know, if we do get a close above 100, I think there's probably a continuation trade for like 15%. So I will definitely be looking for that. Meta on the daily. So we broke down from key support. We back tested. We're basically closing the gap right now. Obviously, we had that very aggressive gap down based on like the metaverse, and nobody gives a shit about it. And they're just like incinerating billions of dollars, which is cool. When money's free, you can do that, but it's not free anymore. So you can't just light money on fire in the metaverse. Well, no, you can in the metaverse. Okay, this is what they have to do. Instead of lighting money on fire in the real world, they need to create the metaverse, and then they can go to the metaverse, and then they can light as much money on fire as they want. But if they light all the money on fire, there's not going to be a metaverse, and then they're never going to be able to light the money on fire in the metaverse. So that's it, okay? It's an infinite metaverse loop. So we'll see what happens. But, I mean, hey, we're going back to the moon, so why not? Why not? So back testing resistance. So, again, another one at resistance. Is that it? Does it have legs? We'll have to see. I mean, this thing has been an absolute pathetic performer. But, again, it did come down like almost perfectly to another one of our targets. Front ran the fib just a little bit, but, I mean, this thing is just melting down. If you're going to catch a knife on something, I don't know, this is the one you want to be catching it on. I mean, I promised myself I'd never say this, but maybe just dollar cost average into that play. Amazon on the daily, the A in magma, it's melting down, obviously. New lows, bounced off the lows a little bit, but I mean, what is it doing? It's back testing the last level. This was where it found support last time, ran up here, got smacked down to new lows. And now what? It's trying to run up here. It's trying to get back above the previous support. So what is that? It's an SR flip. It was support. Now it's resistance. If we get back above it, we can reclaim it as support. This is going to look like, you know, a little spring. And then we can retest the 200s again, close to like 125. If not, though, if we can't get back above it, if we keep getting smacked down, you know, we're going down to the lows. We're coming down to our next fib level. We're going, you know, sub, maybe 80, low 80s, going low 80s. Obviously, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. What's going on in the chat? How's everybody doing tonight? All right. So we got Angel in the house. What's up, lazy boy? Appreciate you, brother. Trader Billy J is in the house. Wazza. Wazza. Are we still doing that? Is that cool again? Are we bringing it back? Yoda says, fantastic time it is. Crypto trend trader time, that is. Keeping it real, always he does. Brave browser update it needs, by the way. Yeah, man, I'm definitely guilty of slack-a-lacking on the updates / reboots. We need more like crypto trend trader. Yeah, I think the same thing too, man. I've been trying to clone myself, but so far I've only been able to do it the traditional way. I have not been able to actually create clones. Yoda says, we need more. Oh, wait. Indeed. Oh, sorry, that was Angel. I got you. I could just confuse myself. Chosen the Jedi Council. He is. What's good, says Parag. What's up, Parag? Good to see you, man. Back in time, catching up with the live stream. Hey, Ralph, it's been a while, man. Hopefully you are doing well. Crypto Deli in the house. What's up, Crypto Deli? So, yeah, hopefully everybody's doing well. Let's check out a little crypto while we're at it. Is it going to be crypto trend trader, or are we getting into the crypto trend hater? I don't know. Let's take a look. So longer time frames, we're going to go backwards on this one, just to keep paying attention to the bigger picture. So we do have the 821 bear cross. We are in the bearish control zone. We have all red histograms, red slope line. The bears are in full control. The chart is up and to the right. So on a long enough time frame, Bitcoin has always gone up. Does not mean it will continue to. Going back to the weekly here, we see for the first time ever in all of Bitcoin's life cycle, it has lost the 200 simple moving average and is closing below it. And it has now flipped the 200 exponential red, the same thing it did back here, but it maintained the 200 simple. And that was in the 2018, 2019 bear market at the bottom. So losing that support was very important. And if we spend long enough under here, which we did have a chance to retest and try to reclaim that level, but it failed and we broke down instead because of scam bankmen fighting with little CZ Binance. So their little girl feud, you know, and implosion of the scam, the scheme, you know, whatever the hell is going on over there, the orgy casino party in the Bahamas. I mean, I used to live in the Caribbean, so I get it. I get what's going on down there, okay? But, I mean, I was in no condition to be running $1 billion company, nor am I now. But, I mean, let's be real. Can't party in the Bahamas and do that. So that being said, the breakdown right here, I mean, 200 simple looks ready to flip. So we're about to confirm into our first weekly bear market ever, thanks to Scammy Freed and CZ Binance. I mean, looks like it to me. We had a capitulation, drop, the beginning of our next leg down, arguably. It could be wrong. And then we had this little itty bitty bounce since then in the week. Now we're only midway through the week, so anything could happen. Still plenty of time in the week. But I mean, we want to see at least a push back up to like 18.7 to retest. So we have a bunch of green histograms, then red, but we did get back on top of the slope line. So the first step is to get back above the slope line. Then we got to turn it blue. We need some more green histograms. We need to get above the 0. Step 1 complete. That's good. We did come back into the bearish control zone. We did put in, you know, a little bit of a bounce on the blue Stoch. So arguably we're setting up for some bullish divergence between these 2 points. Still too early to tell. I would want, honestly, at least like another week or 2 of histograms. And by then it'll probably be like, yep, bullish divergence. And we'll have retested 18.75. So that's not really useful. Obviously bias still to the downside on the weekly. On the daily, we don't have a lot of data here. You know, we dropped down pretty hard. We're consolidating in a range for now. We were in the bearish control zone. We kind of came out. We're not even close to a Stoch cross. We had a green histogram, a red one, then a green one again. You know, and that's just starting for today. So not much there. But if we go down one more time, again, still very, very bearish, below the 200s, just looks like complete trash. If we go down to our 4 hour here, that's when this starts getting a little bit interesting. Okay, that's not too bad. Thought we were going to have to delete everything again. So if we just kind of take, now again, we could go from wicks, we could go from closes, you could do whatever you want. But I'm going to do it this way. I'm just going to kind of pick the closes right here on the 4 hour. And I'm just going to connect to this little kind of resistance peak thing that we just ran into on that last push up. So, you know, roughly somewhere around like the 15th at like 17,000 is roughly where that peak was. I'm sure you could figure it out if you're watching the stream right now. But do the same thing on the bottom here. You know, obviously, depending on how you draw this, if you kind of push this out now in hindsight and let that look like a little bit of a breakdown, it actually lines up a little better with the price action right here. Does it make a huge difference if you put it right there or push it up? Not really. Not really. So we'll leave it like this. I think this is probably the way most people would draw it. But there's that potential. If it does come back down, it front runs us again, like what it did right here. So that being said, this is a tight little wedge right here. A tight little, you know, flag. A little triangle. So we had a leg down. Then we have a consolidation triangle pattern. You got to be real careful because, you know, anything could happen. Obviously, my bias is, as long as we're trading inside the range, that we will continue to trade inside that range. But it's important that we pay attention to when we start seeing signs, you know, that essentially a pattern is forming or some Wyckoff distribution or something like that. It's worth paying attention to the possibility that, you know, it could play out. Now, there's not much room left inside this pattern, you know, and it's arguably neutral in the sense that it's basically a sideways triangle. It's just a tightening range. Instead of having a channel, we have a tightening range. Instead of having a hard support on the bottom or a hard resistance on the top, we're just getting a tighter and tighter range. The spring is coiling up. And we know that probability wise, and this is, anything could happen. It does not have to happen, but we can give favor to about 66% to the bear trend. So we're in a bear trend coming down. We consolidate inside of, what we refer to as a bearish pennant. And then when we break down from the pennant or break out from the pennant, the probability of the breakdown is closer to like 65%. The probability of the break up closer to like 35%. So we know there's a very heavy bias to the downside on this pattern right now, this consolidation. Does not have to break down from here, but if it does, that's going to start taking us down to some other key levels that we've been looking out for, expecting, etc. So we sort of front ran just a little bit. Obviously we had the yellow areas where we were potentially looking to take a little dabble, and the green area is sort of a deeper retracement. It's depending on what time frame we're on. We have moving averages, we have Fibonacci's, we have a bunch of different stuff there. Check out the full Bitcoin video if you need to see what's going on there. But that's right around like 14,750, maybe like 15K. So that's the real area I'm looking for right now. Now, that my target really is like 14K, actually like 13.8. But there's a very high probability we don't quite get there. Matter of fact, we might not even get below 14. So I don't want to get too greedy when we do come down here. And I'm not looking for that as a macro bottom or anything like that. But I'm looking for that as a potential area that I would be interested in my next counter trend scalp position. So on the 4 hour, we are starting to try, and we did a couple times already. We got very, very close to that 821 bull cross right here. It actually crossed a little bit and then sold back off. And now we're back testing the moving averages again. We do have blue slope line. We're trying to build momentum. Unfortunately, the Stochs are rolling over here. We're at resistance. So kind of getting a mixed bag here. But the most important thing, the consolidation pattern. Once we break out, what we're looking for is, let's say we do break to the upside. We're looking for a back test and support to hold before a big move to the upside. Say we break down, we're looking for a breakdown, a back test, and then resistance to hold before the big move to the downside. Because either one of those scenarios could happen where we basically get a spring, a fake breakdown like here, and then it goes back to the top, or a throw over where it looks like we break out, and then actually that momentum the market is using to throw the price lower, to force it lower with the momentum of people having to close their positions and then rebuy or resell accordingly. So yeah, that's it for Bitcoin. We're not going any shorter than the 4 hour. That should hopefully lay that out pretty good what's going on. Still pretty bearish on crypto. It really did miss its chance for a big rally with the DXY weakness and now TNX weakness, and instead it melted down and broke to new lows. Except for Ethereum. Ethereum did not go to new lows. We talked about this hypothetical scenario way back when we were here. The back test of the 200s, close out the position. The short position we entered at the 200s, closed that out on the retest down here. And then since then, we've basically just been going sideways below support. So in my opinion, Ethereum looks good before because it could have that big breakdown that we were expecting, the trapdoor, aka, but not put in a new low. As where Bitcoin, if the trapdoor fell out, we were going to new lows. And that's exactly what happened. So Ethereum still staying stronger for now, but back below the 200s, not great. Not great, Ethereum. Stronger than many, but nothing to get excited about. So crypto total market cap on the weekly. Obviously, this was disgusting. A new low on the crypto market cap. We did have a wick down here previously. We have a new wick. We did have our closes down here previously. We have a new close. Absolutely pathetic. We're fighting to reclaim the slope line right here. If we could consolidate here long enough, get back above the 200s, get above the slope line here, maybe we could argue that this is it. That's the bottom. It's in. It looks like we're trying to build some weekly bullish divergence. Now, we've talked about it in a couple of places. Obviously, it could get invalidated at any point in time. But, we have a low right here. We're trying. Let's just say this started turning back up here, and we took out that little, whatever you want to call that little bump right there, a little speed bump. Let's say we get back to that. We start taking out that speed bump. It's going to look like we're bottoming, at least temporarily. And then it's going to look like bullish divergence. We have a low here. We have a lower low here. We have a low here. We have a higher low here. We have a low here. We have a potential higher low here bouncing off of the slope line. So is it crazy? I just said how bearish I am on a bunch of stuff. Is it crazy for me to say, hey, maybe I'm looking for a buying opportunity short term? Now that everybody's getting bearish again, we were bearish. The trapdoor falls out. Now everybody's bearish. You guys, you know what it is. You know what we do. You got to take somebody's money. That's what trading is. You got to take somebody's money. There's got to be a loser. Somebody sold too soon or bought too late. Bitcoin dominance on the weekly looks the same, hanging out at the lows, not good. Bitcoin dominance minus stablecoins, again, still pushing up here, trying to put in some strength, showing us that, hey, there is some weakness going on in all of crypto. There's more weakness going on in altcoins right now, but there's definitely some going on in stablecoins and Bitcoin. So chili, I mean, this thing is probably like the strongest crypto. It's back above the 200 exponential, back above the 200 simple. They're both bullish. It had a 35% dump the other day, got like completely bought back up. Arguably might not look like that anywhere other than Kraken. They have been known for their liquidity issues. But the fact of the matter is, this put in a bunch of higher highs. It put in some, arguable divergence depending on how you're looking at it. Broke down, back above the 200s. One of the strongest cryptos. Hit the descending support line perfectly multiple times and then shot back up. I mean, it looks like it's ready to test the top of the range. So it looks like 30 cents in the cards. This is obviously a big hurdle. Getting above where we're at right now, 23 cents, is a big freaking deal. If it can do that, you got to just expect that it's going to move up here to 30. And then that's a very, very strong resistance. But I mean, 3 times smashing your head on that. Maybe it's going to 42. Now, can it do that while everything else melts down and gets completely wrecked? That's going to be difficult. But I mean, everything else is wrecked right now. And chili cheese dog's looking good. So Solana had a pretty big meltdown. Obviously, new lows. Couple green histograms now on the daily. It had a really aggressive move. Obviously gave up like 66% of its value. So it does seem like it's trying to go sideways here and eventually get a push back up to like $16. So maybe a $10 move in its future here. I'm not sure like if people are like really turned off towards it or what like the overall sentiment is like. But technically, after a pretty aggressive move down here, it does look like it wants to go sideways for a bit. I would look for resistance around 16 and then support around 1280, but basically just chop sideways until something's happening. Link retested the lows. It's basically just hanging out at the lows. Again, very, very weak. It seems like this is getting ready for a big breakdown. We're at a key fib right now. We've hit that fib a bunch of times, and we're just hanging out below the 200s. Get ready. Avalanche, new lows here, hanging out basically slightly below the previous lows. So do we get a pushback up here and backtest resistance at like 1488? Maybe. But after that, I mean, we probably get smashed lower. We'll see. Some of the stuff's pretty freaking beat up right now, some more than others. But Polkadot, again, just getting absolutely murdered. If it goes sideways here long enough, maybe we could get a push up. But more realistically, it's probably just setting up for another leg down. If we do get a breakout, this thing could just go crazy. But a lot of cryptos like that. We'll see. Matic lost some key levels here. Reclaimed them a couple times. Now it's starting to lose the 200s. Seems very likely. As long as it's between 72 cents and 95 cents. I mean, I just look at between the 0.5 and the 382 as just a sideways channel. We broke down from this wedge right here. I mean, if we just continue to get smacked down by the 0.5, and then we break down to the 382, we're already halfway to hitting our measure move. That's obviously a key support. If we lose that support, seems like we go down to the next one. So it looks very likely. I mean, it looks very, very likely that Matic's going to like 53 cents. That's what it looks like to me. Now, does it have to? No, it could push back up here and retest the 618. Just did. Retest it again. Maybe it breaks to the upside. Maybe this was, a little like false breakdown or a spring. To burst this back up higher, but I don't know. Got to be real careful here. It had a big chance to start looking much more bullish. I mean, turn everything off here. We're still above the 200 simple. 200 exponential is arguably acting as resistance. So it seems likely we just chop around between them. And then when you drop the fibs on here, it's like the same levels. So we're basically just in this channel for now. So BNB, this is like super danger mega warning from like a month ago. When we were down at some of these key levels and we were talking about the potential setup for BNB and just how nasty this thing could get, it started looking okay again, reclaiming some key levels. There was obviously, the big pump up here when it was potentially going to buy FTX and blah, blah, blah. Now we're back below the 200s again, hanging on the edge of the cliff. And if the trapdoor comes, we have this little support right here, but you guys know what my target is. If we fall out of bed here, We're talking about like $40 BNB coin, and talking about, potential meltdowns in other crypto exchanges, including Binance. There's contagion in this space right now. And the same way that the Three Arrows Capital implosion and the whole deal a couple months ago, wiped out a bunch of players in the crypto space, BlockFi and some of these other ones that Sammy Sam jumped in to bail out. You have to understand that this blow up that just happened, the same thing is going to happen behind the scenes. So if this is residual effect from the last blow up, and then now this is another blow up we got to deal with, there's other residuals we don't know about. Plus now there's fresh blow ups from this blow up. So in my opinion, grab that popcorn, sit back and relax. Because if you like sales, I think crypto is going on a big fucking sale. Short to medium term time frame, like in the next months, few months, whatever. FTT completely has melted down. It made it down to $1. It's trying to go to 0, but couldn't get there so far. I'm sure it will. I'm confident. I think this. I mean, I don't believe in Sam Bankman-Fried or his Ponzi schemes or stealing people's money and trading it, especially if you're a loser. I mean, if you're going to steal people's money and trade it, at least like double up and then just give them their money back. And you're like, oh, I used your money to trade, but I'm good, so it's okay. You don't just give it to like some little Harry Potter fan that you had an orgy with. Let her gamble away a few $1 billion, lose everything, and then leave you behind. I mean, you do, I guess. I mean, if you got the good, I guess. So 94% down still. I was betting on, I never like to go the full 100% down, but we talked about how 95% was probably like the sweet spot where you should take your profit. So I think that's realistic. Does it ever recover? Yeah, people are stupid as fuck. Of course, it'll keep bouncing around. There'll be like some short squeeze on FTT. But I assume over time it will continue trending towards 0 and then eventually go away completely because, obviously now I'm sure the SEC is paying close attention. Oh, wait. Actually, are they though? Gary, there's been some talk. They're saying you might be connected. Maybe you were playing some dirty games. You better not have been a bad boy, Gary. These people are watching. The Republicans are watching. And if you don't know what I'm talking about, just an orgy in the regulation crypto space. I'm sure you do, though. So gold is next. So gold at resistance, made it to our level, made it to our targets. So that was it. We backtest, new lows. Backtest, new lows. Backtest, I'm betting on new lows. Still. Target hit on silver as well. Measure move. We could get one more little leg up here. It's trying to reclaim the 200s, but it looks tired. Looks ready to fall out of bed again. If it keeps putting in higher lows, though, it's going to start building some kind of confidence. GSG and the premiums on physical eagles and just spot in general is pretty freaking ridiculous right now. So, I mean, a lot of it is the in-betweeners, the retailers, resellers, abusing the situation. But, they're still trying to make money. So if nobody was buying it, they wouldn't be able to charge those prices. So people are buying it, obviously. GSG still chopping around the channel. Nothing changed here. LNG had a little pushback up to retest to 821. I do still think it's going lower. MOS, Mosaic, still kind of chopping sideways in our little channel. URNM, below the 200s, holding the 236 for now. CCJ, below the 200s. Uranium is hanging on stronger than I expected for a while now. The longer it holds on, that's great. I hope it does. I will gladly buy back in at these levels with much more confidence. Tilray is next. So we made it up to resistance. We took profits on the trade. The initial entry was 31%. If you waited and were patient and got the ideal entry, it was 38%. So nice move up there. Congratulations to everybody who took that trade. I know quite a few of you took your profits already, as did I. Could it go higher from here? Yeah, definitely could. If we can get above this long-term descending resistance line, start chopping around, bust a nut through the 200s, this thing could really have some legs. Do I think it's going to happen? Not enough information just yet. Ask again later. Shake, shake, shake. Alibaba had that gap up to resistance. There is a little gap back down here. It could close back to 73. Do I think this is it? Of course, another, article, announcement, disclosure that the Chinese government's going to ease up and they're going to stop with the COVID stuff and the restrictions and everything. Sure, I'll believe it when I see it. Neo at the lows again had a little bounce up right here. Everybody was excited. Everybody got super excited. Neo was up, bounced up 45%. It was crazy. It was insane. That was the bottom for sure. And then it just gave back 12.5% like in the last 2 days. But the most important thing is, when you hear this stuff and you're like, oh my God, up 45% in a matter of days, that's amazing. Like, how am I missing out on this? What am I doing? I need to be bullish. I mean, it went from, this is the thing. If you went from the absolute bottom of the wick, it was 87.5% down. And now it's only 84.5% down. So it looks like 45% if you bought the absolute bottom and rode it on that bounce. But what is it really? It's 3% difference from the top. It's the difference between being absolutely wrecked at 84.48% and completely wrecked at 87.5%. And if it gets down here to 95%, you guys know, that's obviously the short take profit target, 95%. Don't be greedy. And that's absolutely motherfucking wrecked. So, still some stages along the way too. We have like pretty much fucking destroyed, but not completely wrecked. But on the way, somewhere around like that $6 area. So definitely, important to pay attention to because like, CNBC will be like intraday, China, Neo's up 45%. And then you're like expecting some like giant move on the chart. And then you're like, where is it? That's the 45%? Oh, so, perspective definitely key. Baidu, same thing. It was like pretty much all China. Nice little bounce. Trying to cross the 821 back up. We do have some earnings coming in here. Very important to, for perspective, pay attention to the fact that, these lows that we're seeing back here, and the lowest low we recently saw is taking us back to like 2010 levels. So we have support here in 2013. We have some support along the way here in 2019 and then 2020. And then we hit the support, broke through it, arguably, depending on what you're looking at recently. So if and when we break down from this level, this is going to be, it could get a little intense for some, casual investors. Target is next. So obviously we had back tested that resistance on target, back tested the 200s, and then as expected, as everyone expects, you then get rejected and continue into the downtrend. So we did see a big gap down, like 15%. And, the differentiation between something like Walmart and something like Target. And, where have all the Target shoppers gone? Well, they're all shopping at Walmart or the dollar store. And, how is Target's inventory issue? Still kind of shitty. Walmart took care of theirs, but nobody went to Target. So they couldn't get rid of any of their inventory. So expect more sales at Target. And Hasbro is next. So, obviously big toy company. Just wanted to talk about this one specifically. We'll do some more requests here on the next one. But this was one we had discussed a while back. It's been a while since we've looked at this one live on stream. But it has continued to completely melt down. As we had discussed, obviously we had some targets along the way, but basically said, look, we're confirming into a nasty bear trend, and this could get pretty disgusting. And it has done exactly that. We just cleared the green 618. If we really, really zoom out here and we just go to the monthly though, I don't think now is the time. Now, we just lost the 200 exponential and 200 simple. So at the end of the month, if we close back around those levels or something, it could be okay. But we just tested both of them with this breakdown in 2020. With the Rona breakdown, we put in a high. We had the Rona breakdown to a new low. We came up here and never took out the previous high. And now we're losing the 200s and we're at the lowest low we've had on a monthly. This looks really, really bad to me. Now, there's some support. We're still banging around at the 200s. We don't have to just melt down from here. It doesn't have to just go to zero. I'm not trying to like fearmonger anybody or whatever. We were looking at this one for a potential buying opportunity. But just have to be aware, still looks pretty brutal, and it could get worse. So 48 is what I'm paying attention to. If we throw on our longer term fibs here and kind of see what's going on, we have a sort of level on the fibs here at the 382 macro at about 45. We have the wick down here. That was probably, liquidity issue, combination of everything. So we don't necessarily just like dump straight down to that level again. But it's not crazy to think if we do lose these 200s and we see continuation of the downside, that this could end up in the low 40s or, arguably low 30s. And that would be a great buying opportunity, in my opinion. That is the retrace from 2000 dot-com bubble burst all the way to the peak, which was in 2019. So that's a 19-year bull market. And then we go into a bear market, we retrace, 50%, maybe 38.2%. That's 45, probably 50. That's $32. Could it go deep, and still be a bullish retracement at 23? Yeah, I think you really got to prepare yourself for the fact that this thing is in the process of getting wrecked and could continue to get wrecked for some time. And looking at the weekly too, this just looks nasty right now. So probably see some kind of bounce around that previous low from right here. But we really got to just pay attention to this on the macro and say, look, we had a max high right here, peak high. We had the Rona meltdown. So, arguably you could say, well, we want to count over here as the low, or we want to count here as the low. We don't want to count here. You can cherry pick some of the data a little bit. But if you look at the monthly, it paints a pretty clear picture. And the fact of the matter is, we have the lower high right here. We peaked out and we're coming down to threaten the lows. Likely we're going to lower lows and we're confirming into a bear market. On the weekly, definitely confirmed into a bear market. Very close on the monthly as well. So there's a lot of charts out here that look on the macro, on the monthly, especially in the retail space or, consumer sensitive areas. They're telling us, hey, this thing could actually get a lot nastier. So that's it. That's all we got for today. Not going to do any requests. How did we do? Oh, yeah, right at an hour, just over. Perfect timing. Let me jump back in the chat right here, and then we'll go ahead and wrap it up. Obviously, we will have our stream live on Friday morning, 11 a.m. Eastern Standard Time for our weekly market wrap-up, and then Sunday for the 8 p.m. evening stream, Eastern Standard Time, and our weekly market outlook. All right, so back in time, catching up. Good to see you, Ralph. Good to see everybody in the chat. Parag, Yoda, Angel, Lazy Boy, Trader Bill, all you guys. Glad Crypto Deli down there too. Glad everybody made it today. Appreciate you guys. Hopefully everybody's doing well out there. Make sure you're putting in the work. Keep working through the bear market. Not only like physically and making your money, but putting in the work, educating yourself, growing as a trader, getting experience out there, looking at the charts, just getting your grind on just in general. Everybody wants to get lazy in the bear markets the same way they get lazy in the bull markets. The difference is in the bull markets, you're making money for being lazy. You don't have to do anything. In the bear markets, you put in the work, and the positions you end up developing in the bear markets will be the best positions of arguably maybe your lifetime, best trades of your life, but definitely the best ones for the next bull market. So that being said, remember, none of this is financial or tax advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. And if you don't want to end up living in a van down by the river, put in the work. And if you do, well, maybe you will end up living in a van down by the river, but like one of the nice ones, not one of the Chris Farley old vans. So that's it for today. Appreciate everybody tuning in. Getting out of here on Wednesday, 9:12 p.m. Eastern Standard Time, 11/16/2022. I'm, of course, Crypto Trend Trader, and this is our midweek market update. Watch that pattern on Bitcoin. Watch out for that bearish pennant. Watch out for all the markets at resistance and the DXY at support. Because as quickly as we saw everything going up and the dollar dropping, we could see that same thing reversing. So be very, very careful as we are starting to see some exhaustion. That's it for tonight. Crypto Trend Trader, and I'm out of here.